Hello, everyone, and welcome to this month's Brisbane property market update, where we're going to be analysing all of the data for the capital city of Brisbane, but also providing you with an update of what we have been seeing on the ground as a team of professional Brisbane buyers agents. So let's get started. First of all, looking at listing volumes. Now, throughout February, we did see an additional uptick in new listings that have become available for sale. Although, as you can see in this graph, total listings remained relatively unchanged between January and February. But that long-term trend in terms of listing volumes is still significantly below where it has been historically. And this is why we're seeing that squeeze in the market and that market pressure. It's simply because there's not a lot of properties available for sale comparatively when we look and compare today with 4 or 5 years ago. And yet at the same time, we've got that buyer demand that is elevated because of the low stock environment. Looking at sales volumes over the last 12 months, 3.9% has been the increase in sales volumes here in Brisbane. So we're not seeing a lot of escalated activity across the market, but we're certainly seeing more than this time last year. Buyer demand is actually still strong. Now, what's interesting is that the auction clearance rates are actually lower than they were this time last year. And you can see that trend between January and February where the clearance rates actually went slightly down as well. We are seeing and observing a lot of registered bidders are turning up to auctions, but it appears that a lot of the properties may be passing in because the vendor expectations have now moved ahead of the market. So we're seeing that price gap or that differentiation between what a seller expects and what a buyer is willing to pay. That's widening because vendors appear to be seeing that the market's still moving, and yet the market has definitely slowed down compared to several months ago. Days on market are currently sitting at 24 days, according to CoreLogic here in Brisbane. That's up compared to last month where we were sitting at 22 days. And it's also well above where we were 12 months ago, where days on market was sitting at 18 days. So it is a little bit slower to move some properties in the market. That said, depending on the property type and the location, we are still seeing many properties sell under multiple offer situations after the very first open home. So it's very location specific and stock specific in terms of the days on market. Let's have a look at overall dwelling values. So you can see here dwelling values in Brisbane have increased again this month, sitting at 0.2%. But comparatively speaking, a lot of other capital city markets saw that monthly dwelling growth at a higher level than Brisbane. Now, Brisbane's been tracking as one of the top 2 to 3 performing markets, capital city markets across the country for the last 12 months or so. So we have seen a little slowdown in Brisbane this month. Looking at PropTrack data, it also shows Brisbane has increased by a similar amount. Looking at the segmentation of prices, we're definitely seeing that top end of the market grow at a slower rate compared to the bottom end of the market. So affordability driven growth has absolutely been evident at a broader market level. Lower value properties are continuing to appreciate at a faster rate. So we've seen 2.2% growth in the last quarter in the lowest 25% of property values, whereas the upper quartile has seen just 0.4% growth across the same level. Now, that said, there's obviously incidences where we are seeing prestige homes sell for a premium. We're also seeing a lot of homes in that top 75th percentile of property values sell with a huge depth of buyers, including a Kedron auction where there were 15 registered bidders in mid-February. So there's isolated cases where we're still seeing strong prices paid, but that overall trend is that it's growing at a slower rate right now. Looking at 12-month changes, according to CoreLogic, you can see there Brisbane's still in the number 3 position in terms of annual growth rates, looking at capital city markets with 9.7% growth. And that's sitting slightly behind Adelaide with 11.9% and Perth at 14.3%. And other markets have done very little over that time period. Looking at quarterly growth, you've got Brisbane at 0.9%, Adelaide at 1.2%, and Perth's dropped right down on a quarterly basis, sitting at 0.3%. Other markets have been in decline across the last 3 months, as you can see on this graph. Now, we always like to break down the data into the house market and the unit market. Here in Brisbane, we have seen that divergence over many, many months, and that divergence is continuing. So in the house market across the month of February, there was 0% growth according to CoreLogic. So the rate of growth has certainly slowed down. It's maintained its price from this time last month. Quarterly growth dropped to 0.7%, and annual growth is now sitting at 8.6% in the housing market. Now, the median value for a house across all of Greater Brisbane now is sitting at $977,381. So anyone with a budget below this, you're definitely not going to be buying in those inner city 10-kilometre ring locations unless you're buying an impacted property on main roads or flood impacted areas. So it's important for buyers to be realistic about what their budget will buy when inquiring for Brisbane properties. In terms of PropTrack data, in the housing sector, PropTrack did show growth of 0.3% across the month of February. So CoreLogic and PropTrack showing something slightly different, but generally speaking, that growth is either stagnant or slightly positive, but nothing really strong at the moment. Looking at the unit market, I pointed out earlier that we have seen that divergence over many months now. Brisbane unit values are still growing at a much faster rate than Brisbane house values. And that's proven again throughout the month of February, where units increased 0.7%, quarterly growth sitting at 2%, and annual growth is sitting at 15.2%, almost double that of the house market here in Brisbane. But to purchase a unit at the median value now, you will need $690,651. This is just below that threshold for first home buyers and the incentives or stamp duty incentives that apply to first home buyers, and that is $700,000 here in Queensland. So this is one of the reasons why the attached dwelling segment of the market, that's units and townhouses, have been outperforming because they've been a lot more affordable, especially as people have been looking in those lifestyle locations much closer in towards the CBD. Looking at PropTrack data, it also shows that the unit market in Brisbane tracked higher across the month of February, showing 0.3% growth. Now, looking at the monthly change in property values across both segments of the market, we've got units in the light blue bars and houses in the dark blue bars, and you can really see there that since early 2024, the unit market has been outperforming on a month-by-month basis compared to the house market here in Brisbane. A lot of that is due to the fact that the supply shortages are significant. There's very few new buildings being constructed, so there's a scarcity of this product type. And yet that demand has been elevated a lot due to first home buyer incentives, but also due to affordability and lifestyle precincts. We've seen a lot of investors move back into that unit market also, and that obviously puts further demand on that market segment. Looking at 12-month value changes across both segments of the market there, you can see there in Brisbane, the unit values at 15.2% and house values much lower. Obviously, this is relative to the different segments of the market. When we look at dwelling values as a whole, you don't actually see this breakdown. So houses 8.6% over 12 months, units 15.2% here in Brisbane. The only unit market to outperform was actually Perth, which was 17.9% growth. But you can see in that housing market, Perth's growth was at 13.9% and Adelaide's at 11.5%. So all other markets fairly subdued in terms of that 12-month change. Looking at 3 monthly dwelling value changes, you can see there in Brisbane, the unit market shifted 2%. Perth was the same in the unit market, Adelaide 1.2%. Whereas in the house market, we've got the Brisbane market shifted over the last 3 months, 0.7%, Adelaide 1.2%, Perth 0.1%. Now, looking at vacancy rates, we saw a drop throughout the month of January where vacancy rates went from 1.2% in December, dropped back down to 0.8% in January. So that's really tight vacancy. At the same time, though, you would expect that to reflect in much higher rental prices, but Brisbane's only seen a 2.8% change in house rents over the last 12 months, whereas unit rents have actually increased 3.3%. What I will say, though, is that house rents are now falling on an annual basis across many of those inner city locations, as you can see on the left side graph there, illustration. All of those areas that are highlighted in orange are showing that on an annual basis, the rent growth for houses is actually declining slightly. All of those blue areas is where rents for houses are still increasing. Whereas you can see in the inner city unit locations, we're still seeing rent price growth happening. That is, rents are still on the increase. So there's definitely been a fundamental shift in where rents are increasing and where rents are stabilizing or falling, and that is related to product type and location. And this is critical for investors to understand if they're looking at different areas, because obviously yields will be compressing in one segment of the market and yet they'll be increasing in another segment of the market. So looking forward, without a doubt, Cyclone Alfred may impact buyer demand and buyer confidence. That will be a short-term impact as we assess any risk associated with this significant weather event. Of course, vendor expectations, as I've pointed out, are starting to move ahead of the market, and this has been evidenced by lower trending auction clearance rates. And our team attend between 10 and 15 auctions every single Saturday. So we get a really good snapshot of the market to understand what is actually happening on the ground, because the auction clearance rate is not always an indication of buyer sentiment. Sometimes it's an indication of the seller's intent to sell. Units and townhouses are expected to continue to outperform houses in the coming months, and this is due to affordability and also convenience. People are looking for those lifestyle locations. I believe that the fundamentals for Brisbane into the future are still very strong for long-term growth, and we're still seeing a significant amount of interest from local, international and interstate buyers, especially property investors that are looking to secure a piece of Brisbane in the lead up to the economic development boom associated with the Olympic Games in 2032. I hope that's been a helpful update. Please connect with us. You can scan this QR code, book a call with our team, or you can actually access a lot of free resources that we put out, and also subscribe to our podcast, Brisbane Property Podcast, for weekly updates on what's actually happening here in the Brisbane property market. Thank you for your time today, and I will speak to you again soon. Bye for now.